So it looks like markets are trading like everything's A-OK once again. Are they getting ahead of themselves?
I think they're getting way ahead of themselves. You know, Europe has said we're going to give you a plan, but we don't know what the details of the plan are. Also, what you have to consider is with the recapitalization of the banks in Europe, who's going to pay for it? And the market hasn't focused on that at all. And if it's the sovereign nations that are going to have to pick up the tab, then you're going to look at major downgrades in France and possibly even Germany.
Okay, allow me to play devil's advocate if you can, Mark, because it looks like the EFSF has been agreed to, which is about 500 billion euros worth, and then we still have a next tranche of money being given to Greece. So some are saying maybe we have some solution in sight. Is that a fairy tale in your view, considering we do have Angela Merkel and Nicolas Sarkozy seeming to come to some agreement?
I don't think that they did come to an agreement. What I've heard from several reliable sources is that what France wanted was for the recapitalization of the banks to be paid for by the European Union, and what Prime Minister of Germany said was not a chance. It's up to the individual nations, and we're only going to use the stabilization fund in the very last instance to pick up the tab.
Okay, so tell me, how is Europe going to play out? We're going to get a Greek default in your view?
Well, at some point we have to have a Greek default. The country's bankrupt. What's happening is that Europe is just handing Greece money to keep them from defaulting because they're frightened of the consequences. But, you know, the country's bankrupt. Each successive month and quarter shows worse and worse financials, greater unemployment, major strikes. It's just a question of time before Europe is willing to come to the table and deal with the situation realistically.
So does that mean that the markets have not fully priced in what could be catastrophic in Europe? And if so, are you expecting more declines in the future?
Well, actually, you have to look at several markets right now. It's very interesting. The Treasury market is backing up. The stock market has certainly rallied on the hopes that Europe has done something with their banking situation. But high-yield bonds and even the financial credits have widened out dramatically to Treasuries. So what you're seeing is a very dysfunctional market with either the bond market that's going to be right or the equity market that's going to be right, but one of them is wrong.
Okay. Well, which one is wrong? How are you positioning yourself with all this uncertainty?
I think the equity market is wrong. I was doing some research today. You know, during the Great Depression, there were 9 instances when the equity market rallied by more than 15%. And I think the equity market is being wildly optimistic, and they're not thinking clearly in terms of who's going to have to pay for the bank recapitalization. When you talk about a bank recapitalization, that means somebody's picking up the bill. It's not going to be all in the private markets, so that means sovereign credits are going to end up being much worse than they are now, as they have to give capital to their banks.
Okay, Mark, then if that's the case, what are you doing with your funds?
Well, I advise people about 5,500 institutions. What I've been saying to them is to be very cautious, to stay in Treasuries, to stay in senior debt, and to avoid Europe, not invest in Europe, and just to be as safe as possible until this plays out further than it has to date.